Today's guest is someone who has shaped the conversation around European capital markets for years. Christoph Boschan, CEO of the Vienna Stock Exchange.
The vast majority of our revenues, over 90%, come from abroad. In terms of the trading volume, 86% of our trading volume originates abroad. So this is our very role, to put the national issues on the international stage, and in doing so to attract the international trading participants to Vienna and into our facility. What the EU did with the Listing Act is right. It is the right thing to do. They should go even further. They should continue to work on that. But it is all homeopathic when you want to really judge about the impact of building what they claim capital market union or now savings and investment union. I couldn't care less what technical undercarriage is then working under this business model, and that is what I would like to emphasize. We should more evaluate all these things from the business relevance, and if then it is distributed ledger or a SQL, a database, I couldn't care less.
Let's talk about tech.
Hello and welcome to Let's Talk About Tech, provided to you by Venionaire Capital, the entrepreneurial partner for venture capital and private equity. Today's guest is someone who has shaped the conversation around European capital markets for years. Welcome, Christoph Boschan, CEO of the Vienna Stock Exchange.
Thank you. Thanks for having me.
It's very nice to have you, Christoph. As I've said, you've spent years shaping the European capital markets, and your journey started or included Börse Stuttgart, so the Stock Exchange Stuttgart, before eventually leading the Vienna Stock Exchange. So what were the beginnings, and why did the call of Vienna then actually reach you?
First of all, thank you for the compliment, but that's too far-fetched. I tried to contribute. If I really shaped the European discussion, I'm not that sure about that. But yeah, be that as it may, I'm doing my best. And I started out in 1999 as a trader, a market maker. Then had several roles in the Berlin environment, at Tradegate, at the stock exchange. I then worked with an exchange that we built at that time in London. And then I served in plenty of roles as an executive for the Börse Stuttgart group. And almost 10 years ago, a call came, a headhunter called me and provided me with that opportunity in Vienna. And I didn't know much about the market, actually, at that point in time. But when I did the usual, I looked behind the curtain, and what appeared there was a market that was very interesting, because it was already a highly profitable institution, but also with some obvious flaws, and that combination made it of utmost interest for me. And then I decided to come to Vienna with my family, and I never regretted it, actually. That's really, really a very, very nice place to live.
Yes, it is actually. And it sounds really amazing. Now you're leading the Vienna Stock Exchange. And I think many people actually underestimate the reach. So when we speak about the Vienna Stock Exchange, what does that ecosystem actually encompass?
The ecosystem of our exchange conglomerate is much larger than only Vienna. And that's why I always use the term of the Viennese Prague Stock Exchange Group. So it becomes clear that we are an exchange group that covers two incumbent national exchange roles, the one in Austria as well as the one in the Czech Republic. But our role reaches far more out to the other accompanying businesses, like the data business. We maintain a huge data network comprising 10 markets of the region, where we collect the data, format it, and then deliver it to where the music actually plays, and that is mainly Western Europe, the UK, and the US in particular. Concerning our technical infrastructure role for the Central and Eastern European region, It's worthwhile mentioning that we do not only operate our own market here in Vienna and our subsidiary in Prague, but also technically as a service provider, the exchanges in Budapest, in Zagreb, in Laibach, so the Hungarian, Slovenian, and Croatian market too. We are among the founding fathers of the EuroCTP now, so this emerging Central European ticker tape. That's where that's something where we heavily engaged in concerning our infrastructural. We have a lot of accompanying businesses surrounding this technical service provision for other markets, like reporting facilities, for instance. We are the reporting facility for Trade Republic, for instance. Every fractional trade that is conducted through that platform is reported via our reporting means. And so that's what we do, serving the incumbent national exchange role, being a very crucial infrastructure provider for the region. And business evolved quite well over the last 10 years. We almost doubled the profit. So the exchange is very well off.
So I hear a lot of global engagement, especially in Central and Eastern Europe. When we look now at Austria, I mean, here in Austria is not very known for a particularly strong equity investing culture among retail investors. So what do you see as the main barriers to broader participation?
Let me first emphasize the very international character of our business. The vast majority of our revenues, over 90%, come from abroad. In terms of the trading volume, 86% of our trading volume originates abroad. So this is our very role, to put the national issues on the international stage, and in doing so, to attract the international trading participants to Vienna and into our facility. When being asked about the state of play concerning the national market, I mean, obviously in comparison to all the other developed markets in the Western world, and we are a fully fledged, developed, and in all means classified as a developed market, which distinguishes us from the surrounding markets in the Central Eastern European region. But what, by the way, is why we claim to be the gateway to that region too. So if you seek for exposure in that region, well, growth still is twice as high as it is in Western Europe, then Wiener Börse and its listed company is a great gateway. Concerning the national investor basis, there's a lot to do. If you put the overall market capitalization in relation to the national GDP, it becomes clear that there is a lot of room for improvement, because it is only half of what it is in Germany. In France, also markets that are not necessarily known for their vivid and vibrant capital markets. But things are changing in Europe in general, because it is and becomes more and more accepted that particularly equity financing needs to be strengthened to support innovation, also to deliver back a lot of wealth produced by private companies to the overall society, not only through the means of the social welfare state. So things are slowly but surely changing. Sorry for the interruption.
Oh, no worries. So when we look at this from a venture capital perspective, so we as a PE and VC company, we see many startups when thinking of doing an IPO. I mean, they think of New York or London, but what would actually compel them to do this in Vienna?
Well, look, first, if I may, I have to correct your claim a little. I hope that it's not startups that are seeking for listing, because startup, that is where you start out in the funding escalator. You bootstrap, you have your angel investor on your side. May you then develop the company and access the first private equity capital, then or venture capital in what order ever. And then maybe as a first step to approach the capital market, you maybe issue a convertible bond, to test the waters a little, to align yourself and your culture with the capital market. And we are now talking about the higher region of the funding escalator, then you are eligible for listing. So you broaden the investor basis. The more it de-individualizes, it is then replaced by formal standard reporting, anonymized according to the applicable law, which is intense when it comes to an exchange listing. So what I'm trying to say, you need a certain size, a certain experience, a certain maturity in your business to access the exchange. And thinking about where to list, I mean, as always, this is a combination of many aspects, a whole bunch of flowers. Defining criteria might be, where am I incorporated? First of all, obviously, who and where are my investors? What market do I address with my product? Yes, and also where do I find the most favorable tax, corporate, and listing law? And all that together then leads to the selection of a particular market. And in the vast majority of cases, that leads to a listing on the home market. Because the decisive criteria in the end is, where do I find the most visibility and the most liquidity? And the after that long speech, actually, I have a very, very short answer to any candidate. Look, I mean, just get in contact with us, talk to us, because we approach this issue in a very substantiated and formal manner. We will make a liquidity projection for you. We will calculate it through. So make that decision independent from all the buzz and fuss that is out there in the market, all the prejudices and stereotypes you hear about the alleged attractive listing venue. Let's simply calculate it through. So we will open up the right industry peer, the right free float market peer, and then we will, according to real data, do a liquidity projection. And then you should list according to that result. And the result, I can promise you that for an Austrian issuer, it will always end up in this venue, because this venue will provide you with the highest secondary market turnover. That is the decisive criteria. Now that counts.
So, I mean, you have mentioned that a bit in this answer, but I mean, regarding IPOs for startups, it has been the natural endpoint for them, but with the rise of mega private rounds and companies staying private longer, is that still the case?
Look, I mean, in the end, it's all a reflection, I think, of the interest scenario that you are currently in. We are, yes, facing the end of a very long phase, the golden age of private equity, mainly fueled by non-existent interests and very, very, very cheap, affordable capital. And so that, I think, is the strongest relation. The moment that environment changes, the more competitive the exchange product and the public listing gets. And I think also the significantly higher numbers of exit that we've seen over the last, let's say, 24 months are a result out of that. It has a direct link to the interest environment.
The EU recently made IPO rules more flexible and reduced some listing barriers. So do you feel this will increase public listings, or has there already been an impact there?
Look, you know, I was always more on the skeptical side because, and I don't want to be misunderstood here. What the EU did with the Listing Act is right. It is the right thing to do. They should go even further. They should continue to work on that. But it is all homeopathic when you want to really judge about the impact of building what they claim as the capital market union, or now it has received another term. It is the savings and investment union. We all should be very skeptical about that initiative. Not because I'm saying this is wrong, it is the right thing to do, and they should continue implementing that. But nothing of this, even summed up, will radically change the European approach to the equity markets. You can't establish markets by pure regulation. That is a necessary precondition, but it is simply not enough. What counts is the relevance of the capital pools that are available for the market, and everything then derives out of that. So every political measure should be targeted at exactly that, at establishing the relevant capital pools. And talking about relevant capital pools, it instantaneously becomes clear that the EU actually has no real means for that, because where do you find usually the largest capital pools? It's always a matter of the organization of the pension system. That's how they are established. That's how it is in much more in markets that have more emphasis on the equity side, like the US, or also partially Europe. I mean, look at Denmark, look at the Netherlands, look at Sweden. All countries that have actually proven how it can be doable in Europe. All states with really the highest demands towards their social welfare provision, but they also, at the same time, have the deepest capital pools and the deepest capital markets. And how did they manage that? Well, they opened up, at least partially, and no one is here on the way to really replacing our pay-as-you-go systems. What they did, they enriched the pay-as-you-go system. That's the way how we approach those things in Europe, and those things were historically developed here, and that's how we want to have these things managed. But they enriched that system with at least a tiny capital market orientation of the funds that are contributed into that pay-as-you-go system for investment, for capital market allocation. And that then build up over the decades is producing tremendous compound, and is relieving significantly the current pressure on particularly the pension systems. And that is obviously something that lies in the sole and undisputed, by the way, discretion of the EU member states. So it is the obligation of the respective individual member state to act now. We've seen a lot of movement there. The Germans reacted, overhauling their non-performant Riester-Rente. The Poles recently introduced very, very interesting pension savings accounts. The Greek did something. Our Czech colleagues actually rank among the most radical one. When my Prague CEO colleague, Peter Koblitz, buys Austrian shares, he is capital gains tax free if he holds it for at least 3 years. So we are seeing a lot of movement there, even radical approaches like the Czechs. In our case, we've recently seen some indications, particularly concerning the overhauling of the second pillar, so the corporate pension system, opening up it a little in terms of capital allocation to relieve it from the capital guarantee, a little more also to implement means, make it accessible for a broader employee basis. We will see. So far, my predictions based on what I've seen in the proposals are not enough to really make a difference. And what we are still lacking is for sure an overhauling of the third pillar, the individual savings accounts. There we are really, really lacking behind. I mean, just picture that poor Austrian investor who works, receives his salary, obviously, then tax deducted, or the employee has to pay the income tax. Out of that income taxed salary, you become a co-entrepreneur with your investment. Then you are due to corporate tax. And out of the already income tax and corporate taxed capital, when dividends are paid out, the capital gains tax is due, also with a quite prohibitive 27.5% rate. So you see quite an escalation along your trip as an Austrian investor. And to provide relief here is really of the essence to finally strengthen the national investor basis. But I mean, remember what I've told you. Yeah, we as an exchange, we always, seeing that and recognizing it as our fate, we always oriented then internationally, and international attractors recognize the quality of Austrian shares, and that is why we ended up in that situation that we are in now, a highly internationalized market with a great recognition abroad. But as far as we all value that capital inflow, it comes with the price, and that is the dividend outflow. And to change that at least a little, and to let the Austrians themselves participate much more, that is of the essence currently.
So to sum it up, there is.
I'm so sorry. I'm getting a little emotional whenever it comes to that tax issue, because it is the most pressing and the most obvious telling issue that we need to work on. We are really falling behind here.
Definitely. To sum it up, we have some movement, but apparently very, very slow movement towards the right direction. Now to switch to the technological perspective, the podcast is called Let's Talk About Tech. Many people still picture trading floors with people shouting and waving paper tickets like in the movies, but exchanges today, like the Vienna Stock Exchange, are essentially highly sophisticated technology infrastructure businesses. So how technology-driven is the Vienna Stock Exchange, and how did it get there?
Purely technology-driven. Wherever you nowadays see vivid and vibrant trading floors, then this is the propaganda exercise. And well done, by the way. And I've done it too. I also contributed to that when I was in charge in Börse Stuttgart. I reintroduced even the opening bell, the closing bell. We built huge screens as a display, but for what? Not for the traders any longer, but for the interested investor audience. But there is no really functional need for trading floors anywhere in the world. All exchanges went purely electronic, I would even say 30 years ago, maybe. First victim of electronification were the intermediaries, the brokers. No one had to really run to the exchange anymore, not even to the market maker on the exchange floor. This was replaced actually 30 years ago entirely. Then we had that interim period of market makers, particularly in the German-speaking region, the Skontoführer in Germany, the Sensale here in Vienna, still being present on the trading floor, but even that is not necessary any longer. No exchange builds and building. We are building or have built trading systems. Trading systems nowadays have even commoditized in a way that there are plenty of relevant providers, and actually you more buy that as a commodity today. And so fully electronic, and that is maybe that then brings us back to our activities, more and more including developments that happened outside the classic traditional financial market infrastructures, like the distributed ledger technology, where we not only ran plenty of pilot projects in Prague. We somehow embraced that, built a ledger-based custodian there that is now more and more filled, mainly on the debt side, by the way, not necessarily connected to the equity side. So, consider exchanges as purely electronic and really close to every relevant tech development that is taking place.
Your last part of the answer actually leads me to my next question. I mean, one of the biggest topics right now is tokenization and blockchain-based securities. So, I mean, I think Jamie Dimon recently said JP Morgan must move faster because a whole new set of competitors is emerging around blockchain. So what do you think of this development? And I mean, you said pilot projects are in place, but what are the ambitions?
No, we've moved beyond private projects already. The custodian has been set up. It is operational. And look, maybe I'm even more radical than Jamie Dimon in that case, who we all know approaches the whole issue of tokenization very cautiously, always emphasizing it as a technical means and a relevant one, and then clearly distinguish it from what is tokenized there, which is mainly still Bitcoin and the likes. So I always approach things from a purely economic perspective. I always ask, what is the product there for? What does it do? What willingness to pay for it? Does it ignite at the client side? What is the purpose and what is economically in terms of profits in there for us? So and the rest then is technical means to materialize that. And I couldn't care less what technical undercarriage is then working under this business model. And that is what I would like to emphasize. We should more evaluate all these things from the business relevance. And if then it is a distributed ledger or a SQL a database, I couldn't care less. It is a means of implementation. We will see how this new alleged successful tokenization world will turn out. Main questions still remain to be, does it really change the liquidity nature of this or that particular instrument? We've seen a lot of tokenizations of instruments that lack this liquidity, and also the change and improvement in the electronic means from a pure database driven to and distributed hasn't really changed that. And but as always, things are evolving, and I'm not neglecting that. We have to take that seriously, and we on an ongoing basis have a very deep look into it, and will apply and will move into that direction whenever necessary. But again, it is a purely business-driven decision, not a technical one, and one shouldn't mix those things up.
Yes.
That's of the essence, I think.
When we look now in the future of the Vienna Stock Exchange, what are the future plans? I mean, 10 years from now, what do you think? What are the plans and developments?
Oh, that's very easy to say. We will see Wiener Börse with much higher profits, a much more diversified business. I mean, we today only covered our technical service provision and our incumbent exchange role, but look at what we've done over the last 10 years. We've set up the ledger. We've engaged in the central ticker tape. We have started one of Europe's, if not worldwide, leading listing platforms for debt listing. Even surpassed the old docs in that games in terms of number of listing. The Irish Stock Exchange, the Luxembourg Stock Exchange, 33,000 new listings last year on the Vienna Stock Exchange, the Vienna MTF, how we call it, in comparison to 8,000 the year before. So just to give you an insight of how fast we are growing in that area of business. So what I'm trying to say is the Viennese Exchange and Prague Stock Exchange, we will keep, nurture, value our very DNA as incumbent national exchanges. However, we will enrich that further by accompanying businesses. We've been very successful with that. We are growing, and so I'm looking quite confident into the future.
That sounds amazing. So I think one of the key takeaways from today is that Austria and the Vienna Stock Exchange is a significant player, technologically, economically, and also institutionally. Thank you guys for watching. Thank you for the insights, Christoph. It was very nice to have you.
Thank you for having me.
Let's talk about tech, baby. Let's talk about your IP. Let's talk about steel, baby. Let's talk about VC.